Are you able to say anything about the percentage of alternative lenders at this moment in relation to the traditional banks, lenders, and where you see it going in the future?
The market still is dominated by a very strong presence of banks in continental Europe. What has changed, however, and therefore that makes it even more difficult to answer your questions, that there are more and more deals where you find them both, banks and insurance companies. So it is not either them or insurance companies. I think the mix and the combination by way of club deals is growing tremendously. I remember very well 2 years ago it was Delphine who set the first deal live in the French market for refinancing of a very large and prominent office building where for the first time 3 or even 4 insurance companies provided the financing, and that was really a big loan amount. At that time it was a breakthrough in the French market. Nowadays, or 2 years ago, nowadays if I look at what happens in 2013 and 2014, this becomes more and more, let's say, the name of the game. In particular, French banks have understood this concept very well, and they are acting more and more as agent and arrangers to set up club deals jointly with insurance companies. So it is not banks or insurance companies, it is more and more the two of them at the same time, but to a significant growing extent.
Okay, good. Yeah, Delphine, if you want to add to that.
Well, I agree with Roland. It's difficult to give a percentage because I would say that they work together, but sometimes they compete on very different typology of transaction. As an advisor, we worked a lot with debt funds on specific transaction where we couldn't find, well, some other banks wouldn't be the right partner. Yeah, 2 years ago we arranged a transaction for refinancing 500 million euro. It was the first insurance company bond, and we were running a process with a bank, traditional bank pool, and insurance. And insurance were seen by the investors as a potential buyer of the asset also. So I mean, you know, it was a very good. I think it was a very good move, and I think this is going to happen again. And it will take some time, but I think that this alternative partner will be very stable in the market.
How do you match the expectations? Normally the insurance companies, at least if it's life insurance, long-term fixed rate, and the bank most probably not longer than 5 years floating rate. How do you match that in a transaction like that?
Well, they can also do 5 years. I mean, on this transaction, no, but I mean, on this, we were referring to the Lumière transaction for the account of Tishman. They've done 5 years, so I mean they can do 5 years. Now I think where insurance companies are very competitive, it's on large underwriting. So on large transaction, I mean I would say that insurance companies can be very competitive.
So they're flexible.
And maybe one thing to add, it depends on the insurance companies. If you have a life insurance company typically has to deploy very long-term money, and most of them, they prefer fixed rate coupon as an alternative way to invest or to get invested their fixed income book. There are, however, also non-life insurance companies, the P&C accounts for instance, and they have on an ongoing basis premiums to invest even on a short and medium-term horizon. If nowadays an insurance company that has to place 2 years' money or 3 years' money in the capital markets alternatively, they don't get almost a coupon of 0%. So it seems to be that insurance companies also get into medium-term financings, which corresponds more to, let's say, the general needs of the investors in the financing market, mainly 3, 4, 5 or 6 years. You have some investors or some insurance companies that are still have only a loan book or an investment book to deploy for very fixed income money, very long term, but you have also floating rate and medium term insurance money that that needs to get invested.